Welcome to Looking at the Markets with me, David Modell. Today's question we're going to try to answer is it possible to time the market? Wouldn't you like to know? I think we all want to know. Well, let's explore this. Everybody wants to time the markets, it seems. And here are some opinions on Apple stock on the day of an earnings report. And that's today. I took these from a website called StockTwits, which is a message board where people opine on stocks and the markets in general. And as you can see, I blocked out the names, but yeah, for every person who's bullish on Apple, there's somebody who's bearish on Apple. This guy over here is bullish, says it's going to go up. And then right underneath him is a guy who is equally bearish, says it's going to have a big miss today. And then underneath that is a guy who's super bullish. He's loading up on Apple calls today. And then underneath that is another guy who's equally bearish. Thinks that Apple's earning report today will be the nail in the coffin for the markets and for Apple. So all these people trying to time the markets, well, they can't all be right. All right, either Apple's going to go up or it's going to go down. Which one is it? Everybody's trying to time the markets. So how's that working out? Well, they might be right. Some of them might be right in the short term, but as a long-term strategy, if you just keep trying to time the markets over and over and over, how's that going to work out for you? Well, I looked up a little bit of research, and here's a nice chart which shows that if you started with $10,000 and you kept trying to time the markets, for example, if you try to time the markets right before earnings reports coming out, how would you do with that compared to if you just put $10,000 in the S&P 500 and just left it there? Well, as we can see, the blue line is how you would have done over the years if you just put your money in the S&P 500 and just left it there. You would have done okay over time. Whereas if you had consistently tried to time the market right before earnings reports over and over and over, well, you can see you would have done a lot worse. A lot worse, okay? Compare, billions of dollars versus millions of dollars, okay? Now, granted, this is going back a long, long time, going back to the 1800s, but just goes to show that trying to time the markets may not be a viable strategy if you're going to do it over a long period of time. Trying to time the market often leads to buying at a high price and then selling at a lower price. For example, this is from today's price action from SPY, the spiders, which tracks the S&P 500. And as you can see, the market went up a little bit. And if you tried to time the markets, you might buy around here. And then you know what happens next, right? Market goes down. You start to panic a little bit, but you stay in there because you're hoping it'll turn around, and then boom, it goes down fast. And if you sell here, you'll be selling for a loss. And that's no fun. And if you do this day after day after day, small losses can really add up to a big loss. Okay? And that's not even the full story. Yeah, or going short at a low price and then buying back at a higher price. Trying to time the market can also lead to that. So here's the same day. You remember we were about here? Well, you saw the markets going down, and maybe you thought, all right, well, I'll buy some put options, or I'll short the ETF. I'll short the spiders. and then goes up and up and up and up. And then you cover your short position here, or you sell your puts here, and that's another loss. So market timing can bite you both ways, going down and then going back up. People will claim to be able to time the market. Of course, they'll be glad to show you how for a hefty price. And I took this from a website, and I had no trouble finding websites that wanted to sell me their market timing software or alerts or a market timing system or strategy. They had so many different names for it. Here's one that offered a unique market timing software. You can gain an edge over the market. And if you buy it now, you can get a 60-day, that's about 2 months, trial subscription for only $2,500. Hey, how about that? Yeah, well, I don't know if you consider that a bargain, but somehow I don't consider that a particularly good deal. Oh, and by the way, do you like the way they auto renew every 2 months? So that way, if you're not paying attention, then after 60 days, they'll charge you another $2,500. And then after another 60 days, another $2,500. Yeah, I'm not a big fan of the auto renew feature, at least not in this case. Well, what does the research show? Research shows that the ability to time the markets is quite rare, and that's if it exists at all. And I got this from a credible source, an academic source. This was not from just some website that somebody slapped together. And I'll just go right to the bottom line so you don't have to read the whole thing. This is a 25-page report with plenty of statistics. And the bottom line is that using two very different approaches, we found overall that asset class timing skills amongst multi-asset class funds is rare, existing only among a tiny minority of funds. Tiny minority, and it's rare. Okay. So, that's not too confidence inspiring if you're looking for, somebody, some magician, some guru who can time the markets. Well, good luck with that. So what's the takeaway? Well, instead of trying to time the markets, I recommend putting together a trading plan based not on hopes and predictions, but on probabilities and capital preservation. And if you'd like some help putting together an investing plan or trading plan, if you need to talk to somebody about finance, the markets, stocks, options, and so on, I'm here to help you. So feel free to contact me anytime. My email address is davidmodell@gmail.com. And by the way, if you like this video, feel free to give it a thumbs up. You can leave comments. I'd really appreciate that very much. Thank you so much for your time, and I hope to hear from you soon.